Hello, can we continue? Can we go ahead?
Yes. Go
Hello.
ahead. Yeah. Let's go ahead.
Okay, so I want to talk about difference between spot trading and futures trading. Can you guys hear me?
Yeah, we can hear you. Just go ahead. Please admit people that are coming in.
Okay. There's nobody in the waiting room. Difference between spot market and futures market. The spot market does not involve the use of leverage. It's not a derivative trading. The futures trading requires the use of, it's a derivative trading. You have to buy the futures contract. It requires the use of leverage. But the spot you buy and hold and expect to sell later, whereby you make profit out of it. In spot trading, traders only buy and hold to sell and make profit later. But in the futures trading, you can both buy and sell at the same time. If the market is bearish, you can short the market and make profits. If the market is bullish, you can also take advantage of the bullishness, long the market and make profit. But for sports, you only buy the market when the market is bullish and sell when you feel the market is about to go bearish. Hello?
Yeah, go ahead.
Hello, can you hear me?
Yeah, I can hear you.
Okay. So introduction to technical analysis. Technical analysis, it's basically candlestick, price action, your chart, indicators. Technical analysis tells us what price have done before and what price will do in the future. You need to analyze the market. You need to look at what the candlesticks are doing. You need to look at different time frames, 1 hour, 1 minute, 3 minutes, 1 year, 1 week, 1 month, as the case may be. In technical analysis, you study candlesticks, chart patterns, use indicators, stochastics, RSI, MACD, divergence, volume. All these are indicators that are being used in technical analysis. Now, we also have what we call the fundamental analysis. Fundamental analysis is basically news, CPI, NPF, non-farm payroll, consumer protection, consumer price index. Now, for technical analysis, you study chart patterns, you study candlesticks. I'll be sharing my screen shortly. Can you guys see my screen?
Yeah.
Hello? Okay, fine. So this is trading view. What we use majorly for technical analysis is trading view. You have to come to the search button and you add any pair of your choice. Could be ADA, USDT, Binance. We have other USDT on Binance, other USDT on KuCoin. It all depends on the centralized exchange which you're using. If it's Binance, you click on Binance, you've automatically added it. You have it here, you click. So technical analysis is all about looking at your charts. It's all about looking at your charts, your candlestick, chart pattern, indicators. These are indicators, order block finders. Click here, you see all the indicators you want, moving averages, volume. This is just an introductory class. So when we commence properly, we will treat all aspects of technical analysis. In technical analysis, we have candlestick infrastructure. These are the candlesticks. The green candle stands for bullishness. The red candle stands for bearishness. And in the trading view, you have a whole lot of tools, short, long sign, short sign, the tool for trend line, want to delete it, take it out, take all this out, your price range. These are things we use basically for technical analysis. Circle, you want to circle, and there are places whereby you can add all these tools you want. These are the tools used for technical analysis. Fibonacci trading, Fibonacci extension, how to use it. So in technical analysis, you study previous price action. For you to analyze your chart properly, all you need to do is you come to different time frames. We have time frame from, as you can see, this is the box. We have time frame from weekly. Once you click on weekly, you see what Bitcoin have been doing on a weekly. Each candlestick is being formed on a weekly time frame. It takes 1 week for a particular candle to be formed on the weekly time frame. You come to the daily. It takes 1 day for a particular candle to be formed. What it means now is each candlestick is being formed in 1 day. If you click on the 4 hours, what it means is each candlestick is being formed in 4 hours. If you click on the 1 hour time frame, it means that each candlestick is being formed on an hourly basis. Click on the 15 minutes. What it means is each candlestick is being formed on a 15-minute basis. Now, our time frame starts from 1 minute, 3 minutes, 5 minutes, 15 minutes. So in the advanced class, there's what we call top-down analysis. Top-down analysis, you start analysis from the higher time frame to the lower time frame. Perhaps from 1 week, 1 day, 4 hours, 1 hour, 15 minutes, and 5 minutes. All these tools you need to familiarize yourself with. You need to understand the trading view, for you to properly analyze the financial market. You need to understand how to use the trading view. This trading view is not just limited to cryptocurrency alone. You can trade stock, you can trade forex, you can trade indices. All you need to do is go to the search button, assuming you want to trade, click here, you have Euro USD, you have AU USD. If you click on Euro USD, it will appear. You click on it, click on your full chart, everything will appear. Just the same candlestick formation you have in cryptocurrency is the same candlestick formation you have in forex. So please, if there's any question, kindly ask. Hello, can you guys hear me? Hello?
Yes, hello, we can hear you.
Can you guys hear me?
Yes, we can hear you.
Please ask questions if you have any. Okay, somebody said, can you explain for that stop loss entry? Okay. Now, can you see my screen? We have stop loss. The entry is where you have to, the price at which you have to buy or sell the signal that is being sent. Now, if the signal said sell USDT, sell BTC USDT at 15,800 or sell BTC USDT at 17,800, that's a pending order. All you need to do is click on market, click on limit. You now go to where you have 17, the current market price. You delete it. If the order said sell BTC USDT at 17,800, for instance, what it means is once price gets to 17,800, the order will be filled, it will be executed by itself. It's a pending order. You now come here, you click on how much you feel like using to sell this USDT. It could be 10%. So once you click on 10%, or you want to use 100%, you click on 100%. Now I'll click on sell. I'm selling, that's my entry. So what it means now is the order has not been filled yet. So where can you find this order? You need to come to open orders. You can see limit sell, price 17,800. What it means is once BTC gets to 17,800, the order will be filled immediately. And if it's a pending order, you will not have the opportunity of imputing your stop loss. You need to be on alert. Once price action gets to that point, all you need to do is come and click on position. Once you click on position, you click on stop loss. At that point, you will impute. You click on stop loss. My app is malfunctioning. You see position TPSL. When you click on this position TPSL, you go to here, you have SL. you quickly impute your SL. Let's say the analyst said you should, your SL should be 18,000 since you're selling at 17,000. You're going to impute 18,000 where you have SL. Once price action gets to 18,000, it will hit you out in loss. Then for take profit, if the analyst said take profit at 16,300, you need to come to where you have position TPSL. Once price action gets to 16,300 or 16,200, as the case may be, once price gets there, it will close the trade for you automatically in profit. Now, this is for pending order. Then for market order, assuming you're being told to enter the market at current market price, all you need to do is click on markets. Let me cancel the trade. Let me cancel the pending order. You want to cancel, click on cancel all. I've canceled it. So the money will now return back to my balance. So assuming you're being asked to enter at current market price, all you need to do is by default is at market price. So you click on it, you want to sell at the current market price, and you feel like using 10% or 50% of your account balance. You click on 50%. You click on sell. So since I already have an existing trade for BTC, it will now just come and fill in. If you check, my margin have already increased. My margin is 31. So if you have, there's one called DCA, dollar cost average. For dollar cost average, there's some times that an analyst will say entry range 17,300 to 17,800. What it means, you have two entry. It means you have to divide your percentage equity you feel like opening that and that signal with. Let's say that the signal is sell BTC USDT at 17,300. You're going to take 50% of your $10, assuming you're voting $10 for that particular signal. What it means is if BTC gets to 17,300, you're going to use $5 to sell. Then once BTC also gets to 17,800, you're going to use your leftover $5 to buy. So if you take the average of 17,300 plus 17,800 divide by 2, it means your average entry price, it's going to be around 17,500. I'm just doing, it's not as if I calculated it correctly. So as you can see, what I did was to add a certain amount of USDT to my existing trade. But since it was a mistake, I can decide to close 50%. I can decide to close 50%. I will close, if I click on close, you screw down. I click on close, you screw down a bit. You see the close button. But since I'm sharing my screen, everything is not appearing fully. So once you click on close, I will end up closing this trade 50%, and the remaining trade will keep running. Hope I've been able to answer your question. Hello? Hello? Please ask questions if you have any.
Hello, guys. Please, can you ask your questions? We are already getting to our limits, so we can all go and rest.
Okay, good evening, coaches. You guys have done a very awesome job with the class. It's quite it's an eye-opening one for me. Before now, we've been trading a bit on futures, but the issues here is the liquidation. But I think is from my own aspect of the stop loss, which you just did. Okay, I think imputing that stop loss is one of the channels or ways that I can avoid liquidation from my understanding of what you just explained. I don't know if I'm correct, because one of the major issue with futures for me is the aspect on liquidation and how the losses can just come in just a wink of an eye. So I don't know. Can you talk a little on liquidation?
Okay, fine. Liquidation. Assuming you're buying Bitcoin at 16,500, and you're using 20x or 10x. You have a $10. You bought BTC at 16,000, and your stop loss is at maybe 15,500. I think that should account for about 2%. Okay, let me just give you a brief illustration. Now, if you buy BTC at 16,000, your SL is at 15,500. The problem most time is if you use a high leverage, let's say you're using 10x on a $10 margin. What it means is if your SL accounts for like 1% or 2%, what it means is once price gets to 15,500, if your SL percent is 2x, is 2%, what it means is since you're using 10 leverage, you will not, it will not even get to your stop loss. It will kick you out of the market because you're using high leverage. So if you're using $100 margin, for instance, to take a position, and your leverage is 10x, and if your SL is 2%, what that means is if the market goes against you, 2% times 10, that's 20%. So it's going to hit you out at minus 20%. Minus 20%, you'll be left with 80%. It will not get to your liquidation point. So the most important thing is calculate your leverage. If somebody said buy BTC at 16,000, SL 15,500. Now check how many percentage SL is that. It is that percentage SL that would determine if you will be liquidated or not. But if your SL is, most times your liquidation point will even be before your stop loss because you've actually over leveraged. I don't know if you get it.
Yes, I do. I'm getting it gradually.
So if you're using high leverage, you cannot buy BTC USDT $100. and you're using 100x leverage. So what it means is 1% against you will kick you out of the market, because 100 times 1% is 100. So you just lost everything.
Okay.
So you need to manage your leverage very well. You need to calculate, look at your, for me, if I'm placing a trade, what I consider first, what do I stand to lose? I learn to accept my losses first before I think of profit. So I have to calculate this trade. If I'm using, I can decide to, it's not as if I don't use 100%, 100x leverage. Of course I do. At that point, my SL should be around 0.1 or 0.2 or 0.5. The leverage must be very, the SL must be very tight, such that if my SL percentage is 0.1, now multiply 0.1 times 100, that is 10. It means I'm going to lose 10% of my margin, what I used to enter that trade. So you need to do your calculation properly. If not, you just impute your SL figure before you say jack, you're out of the market. But if you're winning also, you're going to win times 100 of what you've invested. And if you're losing, you're going to lose times 100. So as a beginner, I think it's advisable to start with smaller leverage. CZ once said something. He said, if you think crypto is a get rich quick business, you should forget it, that you'll make money. So it's actually a gradual process. You make $1 today, you make $2 tomorrow, you make $4 tomorrow, next tomorrow. You keep compounding. But if you feel you want to hit it big one time, you blow up your account and you start from the scratch.
Wow.
So gradually, just be compounding. Gradually. When you now have an account size of $10,000, $5,000, $20,000, even if you use $10,000 and you're using 125x, you won't be liquidated easily. For using small money and high liquid, you will just be kicked out of the market. One small move, you're out. And one big move, you're also in massive profit.
Thank you, sir. I appreciate. Well gotten.
So more questions?
Good evening.
Yeah, good evening, sir.
Yeah, my question is sometimes I come across signals online, but most times what I don't understand is the place where they put multiple take profit, like you see 0.9 this thing, and that like 4 to 5 take profits. I don't know if you can briefly touch on that. How do I set multiple take profits on a trade?
Well, it all depends on, for me, I have two methods of taking profit. One is what we call moving SL to break even, moving SL to N3. Now, if you take a trade, BNB USDT, and your entry point is 200, and your first TP is 215, your second TP is 220, your third TP is 230, 240 as the case may be. What most people do, if price action gets to 210, your entry is 200. If price action gets to 210, some people close 20% profit and allow the trade to run. So they take profit at different take profit level. Some would do 20, 20, 20, 20. But as you're partialing, This what I'm saying now is called partials. As you're taking partials, your equity is reducing and your profit is also reducing. But what I do basically is I lock my profit. Once price gets to my second TP, I move my SL to N3 or I move my SL to my first TP. Now you understand this better if you're a technical analyst. There's what we call market structure. Uptrend, downtrend. For uptrend is higher highs, higher lows. For downtrend is lower lows, lower highs. So now let me better. Okay. You can see my screen.
Yes, I can see.
You guys you can see my screen, right? This is an uptrending market. This is higher high. This is higher low. This is higher high. This is higher low. This is higher high. This is market structure basics. Now, what most people do is this. You enter here, and they say this is your first take profit. This is import. This is correction. Now, if you enter here, and they say this is your first take profit, some people will close 20% in profit. And some will move their SL to enter.
Mr. Matthew, we can't hear you. Your voice is like covered.
Okay, can you hear me now?
Yeah, very clear.
Can you hear me now?
Yeah, clearly. We have about 4 minutes, please, before we are cut off. And that's the end of the class. Yeah.
Okay, this is N3. You move your SL to this point. Once market get to this point, some will close here. Some will close 20% in profit here, but some will move SL to this point. Sorry, move SL to entry. So once price get to this point here now, you know this the most recent higher high have been taken. So when you see different take profit levels, all you need to do is be taking your profit gradually, or if they say take profit at 210 and price get to 210, you keep the trade on. Once price get to 220, you can decide to be locking your profit. You move your SL to 210. At that point, you've locked some profit. When they say take profit 250 and price get to 250 and the immediate past take profit was 230, you have to move your take profit to 230. I'm talking fast so that I don't get cut off. Or you can be closing at every take profit level with a certain percentage. So as you can see, as you're forming higher highs and higher lows, you just be shifting your SL to a point whereby if you shift your SL up to this 43, I'm using GMX. Sorry, I was supposed to use BNB, but I'm using GMX. Once you move your SL back to this place, even if price come down and hit you out from here, now check the profit from here. Let's say from here to here. That's massive. You'll be in profit of about 11%. So assuming you're using 10x, what it means is you're going to get 10 times 11, you're going to have 110% of your investment as profit. We're running out of time. Hello?
Thank you very much for the explanation.
Yeah. So even if it's not clear, we can still dwell on it on the next section. We're running out of time. Any more questions? Hello? More questions? Hello, more questions? Hello?
I think
Hello?
no questions for now. Okay, Mr. Matthew, thanks for the class. It was really clear and understandable. So, guys, I think we had about 3 sections today. So with this light, you can be able to trade crypto on spot and futures, and also know how to at least look at your candlesticks, what charts is all about, TA is all about. Like our teacher said, is all about candlesticks and price actions and all that. So it is very good that you improve on your skills. So we have advanced classes for this. Like I said in the group, we have and you can join our annual membership, and you learn all these things, so many things. So you see, time is not on our side. It's not something you just learn at once. No, it's mentorship and all that. So we are there for you. So tomorrow is another day. We will meet, and this recording will be dropped. All right. So I think it's a good night for now, and more information will